All right, folks, here we go. Tim Davis coming to you guys with another early morning video. Today is Wednesday, April the 4th, 2023. It is approximately 4 a.m., just about, very close to 4 a.m. in the morning, Eastern Standard Time. And I had to jump in here just to show you guys where we are this midweek before we end this early trading week. I think markets are closed on Friday because of Good Friday. But I wanted to point this out, make it loud and clear at this point. That looks like the Bears are ready to re-emerge with a vengeance. I'm going to start off by showing you guys a daily chart of the tool that tracks the percentage of S&P 500 companies trading above their 200-day moving average, and show you that it looks like a line has been drawn in the sand. Okay, meaning that it looks like we have hit a level of resistance again before even making it all the way up back to where this tool started to pull back from last time. It was around 62%. We didn't even make it that far. It looks like we are starting to pivot. Like we're starting to pivot right here, just before that 60% level. Okay, looks like we got confirmation on yesterday by looking at what this candle here did, which it created a lower low from the previous day. So this low here is lower than this low. We had a red candle yesterday that dipped below previous percentage, and it is a strong red candle, which is signaling that we are ready to possibly pivot. Okay, normally when you see that type of movement, even within this tool, that's just a percentage tracking tool. Also, is a overall market sentiment tool. It shows you, which direction sentiment is likely to go. And every time we get that pivot, that we hit a level, and then the next day we start to go lower than the previous, that's normally the sign that we are confirming a new downward trend. And we see that every time that happens. Every time that happens. Lower the next day in a meaningful way. So it looks like we are at a pivot point, folks, for sure. And overall market sentiment is now changing in favor of the Bears. So the Bears are reemerging. They are on their way. They're letting you know that we are ready to reverse this move that we've seen from actually, when I'm gonna point this out, is that in the near term, you saw a move from beginning of March, where price overall market started to go up, and we saw that the momentum of the market shifted very quickly back towards favor of the bulls in an upward trajectory. So that was the momentum. Looks like the momentum is ready to shift again, folks. Now we have to see how far does it go? How far does overall minimum go? Now, this tool is well above this 20-period moving average. I think that's my 20-period. Let me check and make sure that's my 20-period first. Why? Yep, that is my 20-period. So this is my 20-period moving average. Percentages is well above this 20-period moving average. So we got to see, does the 20-period moving average continue to travel upward, and we run into it and treat it as a level of support and bounce? We have to wait and see. That's to be determined. But in the near term right now, we are heading downward, and we have to wait, see what happens once we get down to this 20-period moving average. So wanted to start out by showing you what that tool is showing us, that we are ready to reverse. And if we also look at the full stochastics, wins percentage, CCI, all showing signs of a possible reversal in trend, All right. Now I'm going to go straight to futures chart of the S&P first. Now, the actual S&P itself, showing you the price action ran into a ceiling. Like price action ran into a ceiling right around this level up here before, and we pulled back. And that was around February. We pulled back from that level. It looks like we got very close to that $4,200 level. Very close to it, and like we're starting to pull back. Now, again, the question will be is if that pullback would be muted at this 200-day moving average. I'm sorry, the 20-period moving average. We have to wait and see. 20-period moving average starting to curl up, so that could act as a level of resistance, folks. I mean support. That could this 20-period moving average is starting to turn up on a daily. It could act as a level of support. So we have to wait and see if that what actually happens if we hit that level and bounce. Have to wait and see. Look at the 4 stochastics, also showing you a possible change and a crossover signaling a sell signal. Wins percentage starting to trend lower, heading out of the overbought territory and starting to trend lower. CCI also showing the same thing. Now, let me look at a glance real quick at a weekly chart, because when you see this type of action, I like to also pay attention to the weekly chart to see if it confirms what we're seeing in a daily chart, and if it confirms that we could possibly punch right through that 20-period moving average on a daily. Let's see. Just a weekly chart, and here's a weekly chart. So here too, we have price action that's above its 20-period moving average, even on the weekly chart. So could it act as a level of support if we pull back here? That is a possibility. So we have to see what happens. So we are stuck between support and resistance levels. Here is a level of resistance up here around 4,200. And the 20-period moving average will act as a level of support on the way down. And that's right around 4,000, around 4,000. So we have to see what happens. And this is on the S&P futures. And if we press through that level, then we have the ultimate level of support right down here, which is close to 3,800. So that is the scenario. It's like we're definitely in a pullback mode right now. Now we have to see how far the bears push it, and will the bulls be able to fight back around this 20-period moving average, and then around 3,800 if we should push through the 20-period moving average. All right, that's what the S&P futures look like. Now let's take a look at the Dow futures. Okay, since we're on a weekly chart, we're going to start there. Now for the Dow futures, okay, I don't have a secondary diagonal line here, but we're going to draw one real quick, because this is my horizontal. This is my diagonal line here of resistance and support. Looks like every time we have traveled up, hit level resistance, we pull back to this level here, and that's a long way down. Now, the Dow could also stop right around this level here, right around where these wicks are. So this could also be a level of support right around 30,000, sure, 30,150. So 30,150, that could be a level that the Dow Jones futures pull back to first. So that's a level to keep an eye on. And here, if you look at its 20-period moving average, and this is what makes me believe that some of these markets, that we might punch through the levels that we saw on the S&P, may punch through that 20-period moving average, because looking here, where price action is in relation to this 20-period moving average on this weekly, head to head, head to head. It's like we pushed above it just a tad bit. It's like we're ready to push back below it, and we're right there at it. So um, the Dow Jones futures is definitely in store to lose this 20-period moving average because it barely punched above it. You see this little wick up here, punched above it just a little bit, and it's pulling right back prior to breaking out above it, unlike the S&P. So we're definitely going to have to look at some levels that we can pull back to. Now, you see wicks here, so we could pull back to that level too, which is a $3,200 level. So like the first level of support for the Dow Jones futures appears to be this 3,200 level. Then if we punch through that, we can look forward to price action just punching right on, continuing right on down, just above that 30,000 level. Then if we flush through that level, and folks, this could, we're still in the bearish market, so this could actually continue downward, and this could take the next couple months. So the next few months could be brutal for the bulls trying to rally this market again. So it could be in a up and down pattern until we break through these levels of support. So these next couple of months could be very brutal. Another reason why I think that's the case, because while price action was trending higher here recently over the past several weeks, look what the volume has been doing. It's been tapering off. That's also known as a little, that's a divergence, sign of divergence. Price action was trending higher, but yet the volume on a weekly chart was definitely trending lower. That's a sign that the bulls were less motivated, and that the bears were getting ready, were sharpening their teeth pretty much, just ready for a reversal at any moment. And it looks like that reversal could be now. So rising on decreasing volume is not a good sign for the bulls. When price action is rising, the bulls like to see volume elevating with it as well. Without that, then more than likely this move higher is going to be subdued. We saw that here with the Dow Jones futures, and I think also we saw that with the S&P futures. I just didn't point it out. And yes, same scenario. This week chart of S&P futures, price action was rising. Price action was on a rise for several weeks, but during that time frame, volume was tapering off. So that was definitely in favor of the bears in a longer term sense. All right, switch right back to the Dow. So it's like we're ready to the bears are ready to jump right in here, push price action lower. Look at the daily chart, we'll see the same setup as we saw in the daily chart in the S&P futures. Price action ready to roll over. Full stochastic show a possible sell signal setting up. Range percentage in overbought territory ready to trend lower. CCI overbought territory ready to trend lower with a possible sell signal setting up. That is a look at the the Dow Jones futures. Now we took a look at the S&P, we took a look at the Dow, we took a look at the SPXA 200R, which is the tool that tracks the stocks trading above their 200-day moving average. Now let's take a look at let's see, the NASDAQ. Let's go straight to the NASDAQ next. NASDAQ futures. And I really think the NASDAQ futures is probably going to get hit hard here soon, because this has been showing a lot of strength for a while. Dating all the way back to January. It's been showing a lot of strength. Little pullback. It's been showing a lot of strength since January. And I want to start looking at the daily chart. I'm going to show you guys what the weekly chart looks like as well. So here's the daily chart. Again, price action is well above its 20-period moving average. And as I said before in the past, these moving averages act as magnets, folks. Price action does not like to be so far away from its moving average. So even though price action was heading up, it was well above its 20-period moving average. And it looks like that gap is about to be filled between the 20-period moving average and price action. So I do look forward to the price action pulling down towards this 20 period moving average. Then we have to see what happens once we get there on a daily. If you look at the full stochastic, it's been in overbought territory for quite a while. It's been up here for quite a while. It's like it's ready to come out of that level. Whereas percentage showing you the same thing. CCI showing you the same thing. Now, let's glance at a weekly chart of the NASDAQ futures. Again, we are well above the 20 period moving average here. So again, we're well above the 20 period moving average here. Again, moving averages act as a price magnet, so more likely price is going to pull back down to this 20 period moving average. Then we have to see what happens once we get there. Do we hold this level or do we punch right through it to retest this level down here? And that is where I do think, personally, I think we are eventually heading there. That's around 11,000, on the NASDAQ futures. And right now we're at 13,000. So that's almost 2,000 points lower, folks. If we was to punch, even if we just make it to, even if we get to the 20 period moving average, start to bounce, that 20 period could take price down to about 12,200. So that's still almost 1,000 points away. Yeah, it's about 1,000 points away. So look for some turmoil, some major pullback, and some major price pressure from the bears over the coming weeks or so. All right, that is the NASDAQ futures. Now, the Russell 2000, folks, I love looking at the Russell because the Russell paints the real picture and gives us insight of where the rest of the market could be heading, because the Russell has been the weakest link. And if you notice that since the October lows, Russell had this nice little bounce, and this is the weekly chart. Here's October. Here's where price actually bounced off its 20 period moving average and started to trend higher. And then right around, this is October of, this is October 2020. This is October 2020 where I'm showing you guys right here on the left side of my screen. It's October 2020 because here's 2021 right here. 2020 October lows. The Russell 2000 futures got a bump off of that level. And then right around October of 2021, we hit a level where we started to pull back and drop back below its 20 period moving average on its weekly chart. Okay. And since then, the Russell has been really sticking very close to its 20 period moving average, unlike the other indices. But it's been trending lower since October of 2021. And October of 2022, we got a little bump because it came back down to this trend line here, this dash trend line you see me have drawn here. Got a little bump, went back above its 20 period moving average, very slight, not really huge moves, but it's been sticking very close to its 20 period moving average. And look what's happening now. Back below its 20 period moving average after sticking close for so long. I think the Russell is going to really show us where we're heading. And I think that ultimately the Russell is going to push right back down to this diagonal line here. And that is a huge move down. And I think whatever the Russell does, I think the other indices are going to eventually follow suit. So that's why I believe that some of these support levels are going to be broken in a major way on the other indexes. Because I think the Russell is really going to start to pull back in a major way. So if the Russell does pull all the way back down here, folks, that is a huge move for the Russell. And that could represent maybe 600 or 700 points. We're right now at 1774. This could push us almost all the way close to 1,000. Very close to 1,000 maybe, because this is a little off, but maybe close to 1,000, between 1,000 to 1,300. That's what our weekly chart looks like within the Russell. And then again, same scenario that I showed you guys, that dying off volume, same thing here. The volume really started to trend lower on the Russell 2000 futures on this weekly chart. All right, switch to a daily chart of the Russell. Here's our daily chart of the Russell, and it is flashing big time sell signals. And I'm gonna show you a monthly chart of the Russell, because the monthly chart is really worth paying attention to, because again, I told you that that can be a definitely heads up look at what we can be in store for in the future for our other indices as well. But here, looking at this daily chart, Russell barely got above his 20-period moving average before it started this decline here. Before it started its decline here. I'm on it. Let me draw again. Okay. Okay. All right. Looking at the full stochastics, already flipping from overbought territory to starting to trend downward with a sell signal within the oscillator. Oscillator on full stochastics trending downward, and oscillator in the CCI starting to trend down with a crossover sell signal emerging. And take a look. Let's take a look at a monthly chart of this Russell real quick, because I want to point something out. Look how dire this looks, folks. I'm telling you, bears are still in control of this market in a major way, even though we saw these low rallies from October to now to March to now. The whole time the bears have still been in just sitting back in the passenger seat for a minute, just cruising right along with the bulls, right in the same car. Just sit back waiting, letting them get their little glory. But if you look at this monthly chart of the Dow, of the Russell 2000, look at the 20-period moving average, folks. Ever since October 2021, the bears have really been in control of this market overall, pushing major indexes below, pushing this Russell well below its 20-period moving average on a monthly. And then we just kind of like meandered along from this point, which is around April of 2022, all the way to where we are now. No big, huge moves. So that is pretty much in this general area for quite a bit. You know, not making any headways up or down. Okay, I think that's about to change. So we've been pretty much in this range in the Russell futures since around the beginning of 2022. So right around here, let's line this up. Can't even draw a straight line. So right around April 2022 to April of where we are now, April 20. So almost a whole year. We just been in this range, folks. We've been in that range for almost a whole year. And what has been keeping a ceiling on price action in this Russell has been this 20-period moving average. Look at it. Price has been unable to punch through that 20-period moving average on a monthly, which leads me to believe that we are about to start to create lower lows. So here is the ultimate. I'm gonna put a trend line up here. So here is an ultimatum. We're getting very close to breaking this trend line, this lower trend line. The 20-period moving average is pushing price lower, as you can see here, pushing price right into this ultimate trend line, pushing price lower. This trend line, folks, we just looked at, it is right around at the right around 1,652. So 1652. If we see the Russell punch through 1652, folks, we're going to really see an acceleration to the downside, and that could happen this summer. So between now and the middle of the summer, if the Russell doesn't get a bounce, eventually get a bounce on this monthly chart, showing a very, very strong push above this 20-period moving average, which it has failed to do in an entire year. It has not been able to do that. Remember, it started dropping back in October 2021, and it has failed to retake its 20-period moving average on its monthly chart. And now we are getting very, very close to a major decision on this Russell 2000 futures. If the Russell breaks below this level, folks, remember, again, pay close attention as the summer goes along. This level right here, which is around 16,000, let's call it 16, I'm sorry, not 16,000, 1,600. Let's call it 1,637. If we see a push below that level, watch out below, because then we can see the Russell 2000 futures really ramp up to the downside. And I will guarantee you that the other markets will take note and follow suit. All right. So again, the bulls are at a major area that they must control in order to turn flip this market to a bullish narrative, to a stronger, longer-term bullish narrative. If they fail to defeat the bears, where this line is driving, call us the line in the sand on the Russell 2000 futures, the bulls failed to beat the bears here. I think that talk of we're in a recession is going to turn to, okay, we're in a recession. Remember, folks, recessions don't end, you know, with the overall market and the bull market. So they call them for a recession. Okay, we're going to continue. We're going to see more price, much more lower prices than where price action is now in the overall market if we ain't in a recession yet. Okay, so they call them for a recession. It's saying recession is not here yet. Then we're going to end up seeing much lower prices overall. All right. So I had to point it out with the Russell, so you got that the Russell is really our cursor as to what we're going to be in store for and where you really want to pay close attention to. The Russell is going to give us a fair warning. All right. So we got through that. And let's look at it. I think, did we look at a daily chart on the Russell? Yep. So you see we're about to flip. Another telltale signal, if we look at copper futures, folks, copper also gives us early warning signals, because normally copper follows the overall market. It's already dipping back below its 20-period moving average on its daily chart. And if you look at a weekly chart of copper, look at the oscillators in copper, folks. They've really been deteriorating since the beginning of 2023. It's been in a downward trend. It's been in a downward trend where price action is trying to rise and hold above its 20-period moving average. That is a sign of divergence, folks. The oscillators have been telling us this is nothing but selling pressure. But the bulls have been like, no, 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 no. We want to go up. But that's divergence, huge divergence. That was the warning sign. Only copper is also a precursor to what we can expect in our major markets. So it's like copper is ready to break the lowest 20-period moving average and trend lower. That's another tool that you want to look pay close attention to. That is a weekly chart. Look at a monthly chart. Copper. See that nice move up from around November of last year, and ran right into a major wall at its 20-period moving average on a monthly chart. Right into that major wall. Look how I started to struggle. Look at this struggle in here. Big time struggle at the 20-period moving average. So price action dropped below the 20-period moving average, 2022, came right back up. So instead of creating a higher high, it's creating a low, so a lower high. Just muted out right here. Look like it's ready to do one of these actions and possibly heading lower, and may this summer create a lower low that we did here. Look at the oscillators. full stochastic is already starting to shift midway before we even got to overbought territory on this monthly chart. So I think this summer is going to be really brutal, folks, for the bulls. They can't find a way to break above these levels, and it looks like the Bears are already jumped into the driver's seat, and it's just smacking the bulls around, making them think that they can rally. And the Bears like, no, 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 don't think so. That's that. Now, let's take a look at crude oil, because now crude oil looks very interesting. And again, crude oil can be the sign, it could be a huge signal as to what we can expect in our markets as well. Because remember, folks, last time we had a big push up in crude, it put pressure on our markets because it added fuel to the inflation thought, added fuel to the inflation fire, added fuel to the inflation fear. So here's a monthly chart of crude. And I tell you, it looks like crude has really found a level of support here. Like crude has found a level of support, and it looks like it wants to push higher. Look at crude as it relates to its monthly chart here. Monthly chart I'm looking at. Let's make sure. Yeah, so this is a monthly chart of crude. It looks like crude wants to hold support right above $75 a barrel. Right, so it's right around $75, but it looks like crude wants to hold that level of support and wants to push higher. Looking at this monthly chart, that's what it looks like. Look at the full stochastics in oversold territory in the monthly and oversold territory on the Williams percentage, but starting to peek its head out of it. It's like it's possibly trying to cross with a buy signal. Now, that was what the longer term picture looks like. Now, the bigger picture looks like. Now, let's draw your attention to what crude did recently. It gapped up. So now, you guys know how I feel about like these gaps. When we see gaps in the market, normally gaps fill most of the time. So here's a weekly chart of crude. You saw the gap up after the OPEC decision to cut barrels of oil out of the market, and we gap right up to a strong level of resistance. That I told you guys that in order for a bullish market narrative to continue to stay within crude, it had to bounce away from this. All right, it broke below this level of resistance. So I told you support, and I said it had to bounce above that. And if it could not bounce above it in a meaningful way, then we could hit it and come right back down. Well, the bull stepped in here and said, we're going to push it higher and even much higher. Now, no concern, but no, nothing goes up in a straight line. I do think this gap here could possibly fill before the next move higher. So that's a possibility. So if you look at this line in the sand up here where resistance is, it's a strong level of resistance. Every time we hit that level, we had some kind of pullback. Oh, we got close to it, had some kind of pullback. And we pulled back below the 20-period moving average. Now we're above the 20-period moving average. So could price action pull back a little here soon and fill that gap? That is a huge possibility. Now, if we do come back and fill this gap, the question is, do the bulls stay in control and cause price to bounce from this level if we pull back? Now, we could too not even pull back to that gap right now and continue to go higher. So that is something that remains to be seen. But either way, if we bounce from here and pull higher, it's in favor of the bulls. Even if we pull back to this 20-period moving average and bounce higher, it's in favor of the bulls. Now, if we pull back and punch right through this 20-period moving average and continue lower and take out these previous lows, and it's in favor of the bears. So that's something to pay close attention to over the coming weeks or so. Look at a daily chart of this tool. I mean, of the of oil market. And here we go. See the well-defined gap up in price here. That's around $75. So right around $75, we gap right up to 80 and even hit 81, but it looks like it's starting to peter out. So we got to see what happens with this. In the near term, again, we could see a stall here. We could see the moving average start to move up towards price. So we could see a stall here, or eventually we could see a fill right back to the $75 level. Because if you look at the full stochastics, we just peeking our head into overbought territory. Risk percentage is in overbought territory. CCI is in overbought territory. So we could see some type of pullback here that may coincide with the overall market, especially by looking at some of the energy stocks. But I think the oil market has a better chance to hold to be very, very relevant in this pullback. If we do experience a pullback to fill this gap, it has more of a chance to find early support and move higher. So we have to see how this pans out. So one or two things are going to happen in this oil market. We're going to pull back, fill this gap before we punch through this level and continue to go higher, or we're going to pull back, fill this gap, and then pull back and trend lower. So that's something to pay close attention to in oil. Again, remember, we're right at a level of resistance. That's why we're just seeing over the past 24 hours or the past day or two, we got up to this level, gapped up, and we stalled out here between 80 to 81. We stalled out at this level between 80 81, a little bit before 81. But in order for crude to really, really break out to the upside, it needs to see price action above 83. So if we get above 83 in crude, then you know that the bulls are in control of this market. Okay. All right. I think I went over everything, folks. That's very important. Oh, so we might as well take a look at gold too while we at it. Now, gold has been showing strength, folks, and it doesn't like this strength wants to let up. We're up a lot in gold. We're definitely in some overbought territory, but I think, gold's going to find a way to go higher. It's going to find out even in overbought territory. Now, volume has tapered off, so I do think gold could pull back. We could see gold pull back, but I think this 20 moving average on its weekly is going to act as a strong level of support for gold. I think it's really going to act as a strong level of support for gold. Already established a nice turn higher in the 20 moving average on its weekly. So I do think, again, we see volume tapering off on the weekly, so we could start to see some pullback in gold, or not. We have to see. Look at the monthly chart. It is oscillators are just on fire, and they're starting to trend higher. Full stochastic is not in overbought territory just yet, but this strong move up in these oscillators showing you that gold is ready to really ramp up this year and take off. If we start to see CPI data coming hot and put pressure on overall markets, I think that's going to be another sign for folks to jump into this, start to use gold as a real safe haven, and we can start to see price action push much higher. I think we're going to end up breaking this high we saw in 2020 of 2008, 2089, 2090. Okay, that right now is going to act as a strong level of resistance. So we could see price action push a little higher up to that level, and then it's going to act as a strong level of resistance. So if we do hit that level, and near future, we're definitely probably going to see some pullback. But I think the 20 moving average is going to catch price and use it as a strong level of support. So let's see what happens with gold over the next couple of months. I think gold is definitely in an upward trajectory. Remember, nothing goes up in a straight line. This is going to act as resistance right around 2089, 2090 if we hit that level. See, we pull back every time we hit that level, and you see it here. You see it here. Hit that level, got very close to it, and pull right back. Up here, pull back. So could we be in store for a pullback soon in gold? Yes, that is a possibility. But I think this time, I think things will be a little different because there's a lot going on in our economy and our market that can have this price be muted on the downside, so we can hit this 20 moving average and then ricochet. So I do think we, in order for this move higher to be sustainable and be a long-term move, we definitely need some pullback here to, I guess, rejuvenate its fuel, hit the 20 moving average, and then start to move higher. And then I think if we do pull back and start to move higher, the next time we're going to see a major breakout above this level. That is a possibility. All right, folks, I think I covered all bases this morning. I wanted to take time with this because a lot of folks who also bearish the market has been a little leery and thinking, oh my goodness, the bulls are in control. Nope. I think the Bears are ready to reemerge, folks, as the leaders of this overall movement. Look at this. Here's a monthly chart of why we're looking at. I just flipped to this monthly chart of the Dow. Even though you see the oscillators and the full stochastic Williams percent, well, full stochastic at least, Williams percentage has stalled out. Has been creating lower lows. CCI is pointing higher. And look at what price action has been doing. Okay, that's why I say this is divergence. It has been doing much and nothing for many months. That's what we've been stuck at. So since this move up in October, we've been stuck on the Dow right there, Dow futures. Been doing much of anything. The Bears or the Bulls have really not had any say so looking at the longer term picture. So this is a monthly chart. I wanted to point this out too. Monthly chart of the Dow Jones futures. We have been stuck in a range since October, pretty much. Since October, we jumped up here and then we pretty much stayed around here. And looks like that's could be about to be resolved. Look at the S&P, we'll see the same type of scenario. Should see the same type of scenario, yes. And S&P looks more like the Russell than anything because it made it above its 20-period moving average here. Yep. I'm sorry, it broke below its 20-period moving average here around about May of 2022. And since then, it has failed to break back above that 20-period moving average. So it made an attempt here, failed, 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 made an attempt here, failed. And now we're in April making an attempt and like it's failing again. So all these failures to break back above its 20-period moving average on the monthly is in favor of the Bears. 1, 2, 2, 3, 4, 5, 6, 7. The monthly chart has shown the Bears that they are in full control. The monthly chart has been a dire for this overall movement in the markets, folks. Even in the S&P, it's been showing 7 failed tries to break out above this level on the monthly chart. It's around 4,200. 7 failed tries, folks, since last year. And price action has been muted below its 20-period moving average at the same time. And with the Williams percentage ahead of time, that's showing you that the oscillator is starting to trend lower. I think the others are going to follow eventually and start to come right back down. That's what I believe. I think the price action is what I pay close attention to on these longer term charts. In addition to the oscillators and the indicators that we use, but price action gives you more reliability. What's happened with the price action and where have we stopped multiple times? We have been 4,200 has been a strong line in the sand for a level of resistance, and we have not been able to punch through that. And where's price action now? And we've been experiencing that for over a year. Right around 41.20. We tried on this past week, got right back up to that 4,200 and could not break it. Folks, could not break it again. Could not break it again. And look what's happening. We are touching that 20-period moving average in April of this year. That gives me strong. That gives me strong confirmation. Strong confirmation that we are probably 90% chance we will not punch through this 20-period moving average. We will not break above 4,200. That gives me more confirmation that is a strong possibility. We're getting stuck again. Again, you see it. We got stuck there. We got stuck there. We got stuck there. We got stuck there. We got stuck here. Last month we even tried to get very close, but still, you get the picture. We got real close and pull back. I mean, could not punch above it. Okay. So that was a tell signal that overall market is definitely in favor of the bear. So folks, again, I wanted to take time with this. I wanted to show you guys why I now strongly believe that the bears are in control of this market in a major way and have been even through all these bear market rallies that we've seen. I think that's all they've been, as proof in and putting here, bear market rally in last month. Here's another bear market rally, these green candles. Bear market rally, October. Bear market rally. And pretty much nowhere, folks. Bear market rally has been pushing price back up to where they've been at before and just stuck in a range. So the rest of this year, it's going to be detrimental. It could be detrimental for the bulls if they do not find a way to push price action well above this 20-period moving average, well above this level, this $4,200 level, and push to 43, 44, 45 on the S&P futures. If we cannot see, I'm gonna say 4,400. If we cannot see 4,400 anytime soon, and close above it on a monthly chart, that's the key. Closing above it, not just punching through this level of resistance in a major way, but closing above it on a monthly, then the bears are going to push price action lower. Now, the key is, does bears have enough power and enough fuel to push price below the level of support? That is the question. The ultimate low, I say the ultimate low, but is this October low? That's what I'm keying on. Can the bears push price action back down to that October low and push through it? That is what we're going to be watching for this summer. All right, folks, I think I done spilt my guts enough. Let me, one more key. Apple is normally also something to pay close attention to, because Apple is a stock that normally gives us precursor of what we can expect in the overall market. Now, Apple has been showing strength, and it's like it could be about to fizzle out. We have to see what happens. But right now, Apple is, look at the full stochastics. Williams percentage back up to overbought territory, even on its monthly chart. Apple raises a little head above this 20-period moving average, but is Apple about to run into the same fate as the market? That is a huge possibility. Okay, and that could also be a precursor of what we can expect. Here is the ultimate line in the sand in Apple here. That is around 177. That's where Apple failed. And Apple has earnings coming up around what is this? May the 4th. So between now and then, we could see Apple push up to that ultimate line in the sand, which is around 175, I would say. Okay, could Apple push to 175? That is a possibility. But don't expect the markets to follow, because the markets are already drawing a line in the sand. And, again, Apple has really not made any huge headway, but it's been holding steady, holding firm. But that would be the line in the sand for Apple if we do continue to go higher in Apple. That is major resistance right there. Apple. Wanted to point that out. Look at the weekly chart. You see, we already got very close to the level. So could we peak out before then? It's possible that we can peak out before we make it all the way up to this level. That's a possibility. Again, look at the volume, folks. Look at the volume on this weekly chart. So if I was a better of Apple, I would not be in the stock trying to bet that it's going to break through this 177 or 175 and punch to 180. I would not even make that bet, because you may be caught, holding the bag before we even get to that level. It's like we're starting to peter out now. We're already in overbought territory on the full stochastics, already in overbought territory on Williams percentage, already in overbought territory on the CCI. With price action has a lot of space between its moving average and price and the earnings coming up, and a drop in volume, which is not in favor of the bulls. In order for Apple to see this be in favor of the bulls, it would need a rising volume on the way up, but it does not. So that's a divergence. It has a decreasing volume on the way up. So I don't even think Apple's going to make it up to this level. That is my opinion. Okay, it's not a fact, it's my opinion. All right, I think I spilled my guts enough, folks. You guys get the picture. You know, the Bears are beginning to reemerge itself as the leader of this bear market, which it is supposed to be, because if we're in a bear market, we are not out of this bear market yet, folks. Still in the bear market. I think the Bears are about ready to show you that they are still in control. Okay, they sat in the passenger seat for a while, gave the Bulls their thunder, gave the Bulls their little umph. Now they're telling the Bulls to slide over. We want to jump back in this driver's seat. So um, that's where we stand, and I'm holding to that. So hopefully this is something that you guys can use. And I'm going to end this video on that thought instead of rambling on. All right, enjoy the rest of your day.